Welcome to Leaders in Action Looking Ahead. I'm Robin Trimingham of the Olderhood Group, and my guests today are Olderhood CEO Bill Story and John Neal, who's the CEO of Lloyd's of London. This is part 2 of our chat with John. Welcome back, John.
Yeah, good to be back, Robin. Good to see you. Good to see you, Bill.
Well, in part 1, we talked a lot about the history of Lloyd's and some of the challenges of COVID-19. And we were just starting to talk about introduction of new technology at Lloyd's. Tell us, what's the future of the underwriting room at Lloyd's?
Yeah, it's Joe, we went right the way back to 2019, and we sort of said, what do we think this marketplace should look like when we look 5, 10, 15, 20 years out? And we wanted to do that being unencumbered by any form of restraint. And I remember someone asking me at the time, when you say everything's up for review, do you mean everything? And I said, absolutely everything. And it includes the underwriting room. Mm-hmm. And I think COVID's shown us that there is a value proposition in being able to convene and meet. It's important. There's lots that we can do virtually, but there is that need to connect. It's a human thing. You know, we're social animals, and particularly when we're trying to innovate, particularly when we're trying to be creative, particularly when we're trying to create that first connection, meeting's important. So whilst I think in a post-COVID world, there'll be less people permanently based in the big cities such as London, there'll be a much greater flexible workforce, and they'll need somewhere to go. Mm-hmm. And I think therefore, ironically, the value proposition of Lloyd's has just gone up, not down. Because I think it is the logical place, if you're doing insurance or reinsurance business, to meet or convene. But to do that, we need to reimagine what that building looks like. So what does it look like that represents the best of insurance? What does it look like for the underwriters, the brokers? What does it look like for the customers? So we've actually just gone to a broad-based consultation, which we're going to bring to a close at the end of March, to then begin the process of reimagining, reshaping, rebuilding the inside of that building. You know, if you imagine the Lloyd's building that everyone recognizes, can you imagine people approving that design in the 70s? I mean, were they mad? So I think, you know, but good on them for thinking differently. So I'd like to hope that we can think just as differently and reimagine the way in which we use the space inside.
So you mean the physical structuring of the room itself? Beyond, I know you're talking about a virtual underwriting room, so you're really talking about a twin track, if I can put it that way.
Yeah, so we've already, you know, when we reopened in September, we'd already sort of imagined what a virtual room could look like with a real room. So what we wanted to happen was for it to be different, so that a broker could arrive in the underwriting room to see an underwriter, but we had the technology, the video and the audio technology, to allow them to connect with colleagues who weren't in the room. So that happens now, and we've changed that. And we will continue to evolve that virtual capability inside and outside the real room. You know, I sort of imagine much more of a marketplace where you can showcase innovation, and then more structured space, depending on whether you want to underwrite or you have client suites or whatever you might want to do. So, you know, we'll do it thoroughly. We'll do it in deep consultation with the participants in the marketplace. And yeah, we'll have to go through a process of picking the right architects and designers to come up with the best concepts. It'll be fun.
I really like this idea. The oil industry has gone through somewhat of the same process, at least in North America. We've been talking about changes to your physical plant. What about changes to the underwriting process?
Yeah, it's just so important. You know, I think, again, you know, if we look at, you've got to look at the lessons that have come out of the past couple of years. And, you know, we've got to think very differently about the way in which we present our product and our service. You can't keep issuing people with a 100-page document and say, there's your cover. You know, we've got to follow what the retail industry's done and simplify the way in which our products represent themselves. We've got to recognize the fact that, you know, insurance in the olden days was about tangible assets. I've got a factory, please insure it. I've got workers going in and out of that factory, insure what they do. Most people's balance sheets today are intangible assets, isn't it? It's IP, it's data, it's those types of aspects. So we've got to design insurance products that meet that requirement. You know, we've seen with the pandemic that systemic risk is all around us. You know, what's going to be next? How do we provide cover for that? And the answer is we can do all of the above. And I think we've got to go through quite a process with the entire community understanding their needs, making sure we educate each other to satisfy those needs, and sort of re-engineer and reimagine what insurance needs to look like in the 21st century.
I would think that the pandemic has opened up the eyes of a lot of people, still realizing that there needs to be insurance in the world. But don't you think that by coming back to a 300-year-old institution, there is stability, there is knowledge, there is integrity. All of that surely must be, impacting people's minds when they're saying, look, the products are going to have to change perhaps in their particular industry, but let's go to those who know. Let's go to those who maybe haven't seen this product before. They maybe haven't fully understood what things like artificial intelligence is doing to the industry. But I bet that they've got enough people to be able to have a serious conversation. And that I think that stability that Lloyd's has always been here, it's always going to be there. I really think that adds that tremendous dimension of security to essentially the world of insurance.
Yeah, I mean, but it's been a difficult year for everyone, hasn't it? And when you take a step back, I mean, I was adding the numbers up the other day. I think the world's governments have now borrowed something like $20 trillion in the past 9 months. It's US debt alone has increased by a third, by $6 trillion. The UK that I live in has borrowed 65% of its GDP. I mean, the numbers are just mind-boggling. So I think governments can't, put themselves in the same situation again from a risk perspective. Of course, if there's a massive form of systemic risk, only a government can solve the problem. But I think it's brought risk to the fore, where people are now thinking, well, hang on a minute, how can we spread our risk? How can we protect our balance sheet? There's things that we've done right, there's things that we've done wrong. As I sort of said in our first session, Lloyd's will be paying out almost $8 billion in claims. So there's a bit of good that we've done. But there are businesses out there saying, well, hang on a minute, I thought I had cover and I haven't got cover and I didn't realize that. So we can't put ourselves in that situation again, can we? So we've got to take a step back and say, well, hang on a minute, let's explain what we're able to do a lot more clearly. Let's ensure that the policies and the services we provide are a lot more deliberate and a lot more relevant to the businesses, people and communities that are out there. So I think it's an opportunity actually for insurance to come back and demonstrate to all of those constituents that there is a value in leaning on our balance sheet. So I'm with you. I think demand should increase.
Well, what a fascinating example of an institution that's more than 300 years old, and yet you're leading the way forward and showing everybody the way that companies need to adapt and change in order to meet the new demands of today.
Absolutely. And I think, why not? And I think it's all opportunity, and I think I said, when we were talking earlier, no one realized how many clinical trials there were going on in the world. I'm not sure I did, but I knew we were insuring 104 of them. So there must have been more that were going on there. So, there's a new opportunity to provide insurance. I think equally people are now understanding, what systemic risk means. They're understanding what climate risk means. And actually, we've got amazing data. We've probably got more data as an industry than any government's got around climate or around systemic risk. So we can understand it, we can qualify it, we can put a price to it, we can understand the customer's needs and try and solve the problem that they have. And that's the key thing we must do. We need to stand behind the customer and look through their eyes. What's the problem they're trying to solve? Rather than say, here's our product, buy it. So we need to be much more solution oriented in the way in which we think.
I think it's a fascinating time to be in insurance. You've been listening to John Neal chat about what's going on at Lloyd's. Join us again soon.